Does this not suggest that the consumer isn't waiting to see that already? It's changing, at the very least, sentiment, if not behavior outright?
Well, that's what we're worried about. There's some aspect of this that's just an IQ test. I mean, if you've been watching the news and you're not worried about tariffs and inflation, then I don't know where you've been. And on the other side of it, we've seen very high-profile layoffs, whether it be the federal government or larger firms are also doing layoffs as well. And so it's not surprising to see some of this, but the extent to which we've seen it consistently deteriorate over 3 months' time, very worrisome. And we know that uncertainty was mentioned a lot as well. Now, measurements globally of uncertainty have already lapsed the pandemic, which is stunning. That is its own tax on the economy. I've likened it to, a broken stoplight. When there's a broken stoplight at a busy intersection, traffic comes to a halt, traffic backs up, and everybody very cautiously tries to go through, or some people do a U-turn and opt out entirely. That's the kind of thing we're looking closely at. Of course, we'll get the retail sales number on Monday, and I think that there's a lot of people looking for some increase in rebound from January. I'm not sure it's going to be as strong as they think. The early credit card data is not great, and there's a lot of indicators to suggest that actually there was some hunkering down that consumers are beginning to do in their behaviors, and it's a very stagflationary kind of consumer sentiment report for the Federal Reserve to be going into this meeting with.
Diane, you wonder if the uncertainty surrounding these tariffs, the on again, off again, it's a threat one day and it's a concession the next day, is in fact more corrosive than an actual tariff policy. If these were implemented with direction and clarity and communication, would the reaction not be different?
Well, if they're implemented slower and lower, there would be less of an effect. That is not what's happening. And I think that's important. Yes, that's adding to the uncertainty, the rate which, things change by the hour sometimes. And that is important. We've been working with our tax and customs people a lot at KPMG to make sure we're getting all of the information right and how we translate them for our models. And it is sort of mind-boggling. I joked with one of my colleagues. He said, well, we update this daily. I said, not hourly on the chart. But I think it's important, I can laugh about it. This is sort of gallows humor at this point in time because the uncertainty is real. Every C-suite I talk to, you hear it among executives. They don't know where to place their bets. And that's really important. And it's showing up like we saw in this index across the economy. That is something that its own weight. But the tariffs themselves are very large and very real. And I think we have to also acknowledge that. And they're much more broader in scope against this backdrop of, the embers of inflation still smoldering, longer supply chains. Our trading partners are willing to retaliate rapidly, and they want to hit with the most political and economic pain. With longer supply chains, there's a lot more pinch points. This is really something very difficult and a challenge for the Federal Reserve to have to manage through right now.
Well, and as you were just saying, Diane, a challenge for corporate America as well. I do wonder what you're hearing from executives about their confidence in their ability to exercise pricing power, to actually pass on any higher input costs. Because if they can't do that, that could mean, A, that demand is down on the part of the consumer engine, which could lead more toward recessionary calls, I guess, but also that you could be heading into a kind of earnings recession environment if their profitability takes a hit.
Well, really, the size of what we're talking about and what's going to come on April 2nd and April 20th as well, it is both margin compression and they have to pass some on in terms of prices. And so that's why you get that stagflationary aspect of it. And that is what we're hearing, is that we can't pass all of this on. It's too big to pass on. And I think, some of it will go on. That's inflationary. Some of it will hit margins. That's stagflationary. That's why we have a forecast of a very mild bout of stagflation, but that keeps the Fed on the sidelines a lot longer.
Is there a thought on the street, Diane, and among the executives you're talking to, who you refer to here, that this is not the same Donald Trump we saw in the first term when it comes to the markets, that this president who was obsessed on a daily basis with what the S&P 500 was up to is not the man in the Oval Office any longer? Do you believe that?
Well, there certainly is a lot of shock that I'm seeing and a lot of uncertainty. And this is not what they expected in November. This is not what they thought. That said, this is what we've got right now. And I think that's important. and they're trying to manage through it. And there's, this is happening at a time when we've also had a multi-decade erosion in trust. And, when you're trying to get through a bout of uncertainty, we know in economics and in human behavior, having trust is paramount. And we've lost both. And what I also spend a lot of time talking with the C-suite about is that even since before the pandemic, the deterioration in trust among the public and large firms has deteriorated quite rapidly as well. And so this is really important when you're in this period of uncertainty, because it adds to a vicious cycle on top of other policies that could be damaging to the economy.